Good morning, everyone, and welcome to Red Cloud's Electrification Conference. Green energy EVs are made of these. For those of you who may not know me, my name is Joe Fars. I'm a Vice President of Investment Banking here at Red Cloud, filling in for my colleague Dave Talbot today. We have a full schedule for you for the next 2 days, many different companies that focus on multiple different commodities, all of which serve a significant purpose of electrifying our world. We're thrilled with our keynotes and presenters here today, certainly a high-powered roster, and we thank all of you for participating and registering for our conference. I'd like to start by kicking off with our keynote this morning, and we're absolutely delighted to be hosting Simon Moores from Benchmark Mineral Intelligence today. Simon had founded BMI in 2014 and has quickly become the more formidable price reporting agency, not only for a variety of battery metals, but for the entire electric vehicle supply chain. That granular and expert focus across the entire supply chain makes them really unique, from lithium and cobalt mining across to manufacturing of cathode and anode materials to battery cell and even EV production. There's no question that BMI is a necessity for the industry. Simon often speaks at U.S. Congress and challenges that norm, and we are very excited to hear his forecasting for the undeniable demand surge that we are all expecting in the square and we are already seeing. And with that, Simon, thank you again for doing this, and please take it away.
Nice one. Thank you very much, Joe. And big thanks to Dave as well for allowing me to speak and keynote this session, which is going to be on building a global lithium-ion economy. It's a phrase that we came up with about 3 years ago, kind of to evolve this global battery arms race phrase, which I presented to the Senate 4 or 5 years ago now. I felt that calling it a lithium-ion economy was the best way to describe A, what is happening slowly, but B, what the world's leading economies need to do. And that is to build not just massive battery capacity to fuel what are going to be huge 21st century industries of electric vehicles and energy storage, but also the upstream to feed into those plants, which all starts with the raw materials, and the downstream of building the EVs themselves, the platforms and battery recycling, closing the loop. And so that's what we mean by that. And of course, what we are seeing now isn't just China doing it, isn't just Europe trying to replicate that, is now, of course, North America, especially the US, in building a complete economy, which includes massive battery capacity. So I'm going to go through all the components of what's happening in our industry. There is a question Q&A chat box, and Joe will be monitoring that as well. There's questions at the end. So, I mean, this is a slide that most people that would know us have seen for a number of times, but it really outlines the battery supply chain as we see it at Benchmark. So we spend all of our time, or let's say the guys collecting the data spend all of their time at each link in this supply chain from mine to electric vehicle. Now, the key raw materials, of course, have there's 5 key that we track: lithium, cobalt, nickel, graphite, and manganese. They're key on the cathode and anode side because they are chemically refined specialty products. It's not just commodities. It's not just primary processing of these raw materials. There's a chemical step which requires know-how, and that is a blocker, if you like, to getting new products into the market for the battery industry, for the electric vehicle industry. But the next step, of course, cathode and anodes, battery cells, electric vehicles, and recycling. And the key part to this is, for us, is collecting first-hand data from all the active participants. That's where the bulk of our effort goes. We collect data on a monthly and a quarterly cycle. This data could be prices, as Joe led to. We set the lithium industry's reference price. We collect cobalt, nickel, graphite, and anode and cathode prices that go into contracts and into negotiations. Of course, we're collecting volumes, every mine in the world, every plant in the world. That allows us to do a really line-by-line robust analysis of what's really happening. And more importantly, we do that on repeat every month, every quarter, as I mentioned. Those that are interested in any of our services, there are a lot. There are, as you can see here, but the best thing is to contact me go on our website or connect with Joe, and we can help you we can walk you through everything we do. So this is a slide I actually presented at the G7 summit recently here in the UK. And I wanted to open with this because this is what I have been explaining to government departments, government representatives around the world. The trend and the goal, it's turning this global battery arms race, which was just about battery capacity, into building a lithium ion economy. It's developing gigafactories alongside gigamines. Every gigafactory, as I'll show later, is one lithium mine. Every gigafactory is one flake graphite mine. This is how we have to view it. So the planning for these supersized battery plants has to go hand in hand with planning new capacity at the mine level. The second is building it on time. So it takes 7 years at best to build a lithium mine from scratch. It takes 24 to 36 months to build a battery plant. That is your fundamental problem and challenge with the battery supply chain. So you can announce your EV, you can then announce you've got battery plants being built for them. But if you are not announcing new supply of lithium, graphite, cobalt, nickel, manganese, not existing suppliers necessarily, but it's got to be new supply. It's either from an expansion from an existing supplier or it's from a new mine. This hasn't been happening. It hasn't been happening to a detailed level. So you can't just rely on a contract or a piece of paper and if you're an OEM or a battery maker and say, we've got this locked up. You have to really have asset ownership all the way across the supply chain. This is what we're saying to OEMs, governments, and the like. The third is the future, that there are no major blockers to this. That's the upside. It's going to be 10 years of volatility and 10 years, therefore, of investment opportunity. We think over the next 10 years, there will be 3 periods of price spikes or surges, let's say, is the best way to describe it, where you've got 2 or 3 years of intense demand increases from EVs primarily, and with it, prices go up of pretty much all the key inputs as we discussed. Then they'll come down for a 18-month, 2-year period. Then they'll go back up. And when prices rise in these niche industries, they don't go up by 10%, 20%. They snap. They double, they triple, they quadruple. And so it's just going to be a 10-year period of volatility before this new blueprint, this new base of this lithium-ion economy, this electric vehicle energy storage revolution is built. And so that really started in November. And we are just therefore, 8 months, 9 months into this. Just quickly go back. I like to tell the story of lithium, certainly from my personal perspective, because this is where I started in 2006. And I wrote this article in 2007, Between a Rock and a Salt Lake. I didn't know anything about lithium up until this point, but this is kind of what started my career back then. And it's all I've ever done before we launched Benchmark in 2014. The key thing here is lithium in 2007 started to become battery powered. That's when it really started in earnest, but people didn't really care about lithium until 2014. But I wanted to show that first article that I ever wrote on lithium, and the lithium industry, they bloody loved it, because no one even rang them to talk about lithium at that point. But when I was picking up the phone and just asking really simple questions, but that's kind of when it started. That's when the battery revolution, in my eyes, began. There was a next important phase, and this was the rise of the battery mega factories. And this is a picture I took in September 2014 when I was on an aeroplane to Australia after announcing that I was setting up Benchmark. And you just get a newspaper, it's from the Wall Street Journal, I think, pick it up at the airport, you turn the page, and batteries are page 3, 4, 5 of the business section. Elon Musk, of course, began this with the Gigafactory, but now we are completely in a different era in terms of these supersized battery plants. So that was the second most important thing. And now where we are today, these two headlines, which are 11 years apart, also as a personal story for me. On the left in 2009, It's the first ever mainstream press article I was quoted in. The Times, which is a UK-based newspaper, had this headline, and that's the headline to take. So important that lithium car batteries may shift the balance of industrial power. And then where are we now? The battery is ready to power the world. From the Wall Street Journal, I was quoting that as well. And they use lots of benchmark data all the time. And so I think for me, the key part is that it's only taken 11 years, which only 11 years, but it's really interesting to now that headline sums it up, that we are in this mass scale commercialization of the lithium ion battery. So where are we with lithium prices? And this is just a story of the price trend at the moment and how to read the price curve. So when you see lithium prices, or the same for lithium and cobalt, especially because they're lithium ion powered, the others are larger commodities or raw materials, should I say, that of which the battery proportion is quite small. But lithium and cobalt are proxy. Their price trends are proxies for this EV revolution. So when you look at lithium's price going up or down, or cobalt's price going up or down, it's because of lithium ion battery demand. For the other raw materials, it's industrial demand that's driving it. And so with that in mind, I think it's always important to look at the longer term trend of these prices. When I showed you that first article I wrote in 2007, that was price surge 1, and the industry was going wild because they actually thought, they were being told, and this is correct, that all this new battery demand from the emergence of things like the iPhone, portable technology, and also the promise of the Nissan Leaf, which was launched in 2010, the promise of that will need one lithium mine for the next generation. And that's what people were scrambling for. That was, that kind of demand jump had never been seen before in the industry. And as you can see from the price jump here, it's very, it's a little blip compared to what we went through next. Next, 2014, it really began in July then, when, as you can see, that was the second price spike. And that pretty much tallied in with Elon Musk's announcement of the Gigafactory. Now, that wasn't what drove the price spike. It was LFP demand within China drove this initial price spike. And then you had the emergence of EV demand elsewhere domestically in China. And of course, incremental demand outside of China. But there's really a China and Tesla story. It wasn't really a Western story at that point that was driving these prices. It peaked, as you can see, it peaked from 2015. And then in 2021, we started this third phase of lithium price surges. And the question is, where can it go to? Well, the only thing I can say from a fundamental perspective is the gap between supply and demand is bigger. The forecasted gap between supply and demand is bigger over the next 10 years. There are more battery plants competing for roughly the same amount of lithium from the same amount of companies, and more are coming. And there's a scramble from the OEM side as well. So everything's pointing to prices going higher. The environment is far more aggressive, and it's certainly one to watch. And then these dashed lines, finally, just to kind of how I read the price curves, is where the price of lithium settled. So obviously lithium prices, they spike, then they come down and they settle. And as you can see, they're always settling at a higher level after each respective price surge. So that will happen again. Lithium prices will probably settle, they'll spike up, they'll probably settle around the $10,000 mark, which means that you don't have to be the cheapest or even anywhere near the cheapest to have a business going forward. So much lithium is going to be needed. This is the global battery arms race that I mentioned. We're now at 215 plants, an incredible amount of battery plants from 3 in 2015, 3.8 terawatt hours, but more to come, and especially more to come in the USA. And I'll show you why in a minute. But the other key part is, as I've got another chart which explains there are tiers of quality. So Not all lithium-ion batteries can be used in all EVs, just like not all lithium, cobalt, nickel, graphite, manganese can be used in all batteries. There are tiers of quality, so that is a blocker. But there are also elements of standardization, or let's say simplification, maybe lead times being reduced by the OEMs in order to get more supply into the market. That is also happening. So the supply chain is loosening up a bit, which is good news for scaling. And then the key thing at the bottom there is last year, $65 billion of capital was committed to building these plants. More money will be committed this year. It'll probably be in excess of 100 billion committed on new battery plants. Okay, so this is the numbers of lithium-ion battery cell capacity. That's our latest data. And what I did at the bottom was I put it in terms of electric vehicles. How many EVs are really going to be, can that really convert to? Well, at the moment this year, we'll end this year with 753 gigawatt hours of capacity at the moment as we forecast it. The way to read that is, I would read it as 2020, going into 2021, 2022, sorry, going into 2022, it will be roughly 750 gigawatt hours of capacity for all of next year. And then, because it's always delayed by a year. So that's how I view these numbers, which means about 13.6 million EVs for the most part of 2022. Now, that's if it all comes to fruition. The nearer term stuff in that 2020 pie chart is highly likely. The longer term stuff is, some of it is unlikely, some of it is in the middle. And that's another challenge. Just because companies say they're going to build it, some of it won't happen. And so the 70 million number of EVs by 2030, I would say maybe only 50 million EVs will be available at present. So what that means for me is that the 3.8 gigawatt terawatt hours number, or the 3,882 gigawatt hour number, we expect that to double within the next 2 years. Just because, well, many reasons. You've got the growing electric vehicle market, you've got ESS, so energy storage for wind energy, solar, utilities, all of the above. That market has to grow. It has to have available batteries, and it doesn't at present, certainly not the tier ones, which are being favored for electric vehicles. So that's an additional layer of demand. And of course, companies will announce stuff that might not happen as well. So that number really has to go to between 6 and 7 terawatt hours. Then this slide I really like. It's a simplified slide which shows you how much raw material goes into each gigafactory or battery megafactory. These numbers are a good rule of thumb. Now, of course, we are using an NCM lithium, an NCM chemistry averaged out over the next 10 years. Of course, NCM, you've got 523. 523 means five nickel, 2 cobalt, 3 manganese, 622, and 811. Graphite anode is not in all of it, right? That's the other thing people don't talk about that much. Graphite anode is in every single one of these lithium-ion batteries. And so the key thing for me is these are good rule of thumb numbers for a 30 gigawatt hour plant. Now, before anyone picks up, this is the gigafactory, and I do know it's NCA, but it's just a good picture, I think, and it's good to show it with those numbers. I would write these numbers down whenever an OEM announces a 30 gigawatt hour facility, or, you know, you can do the math and run the averages on other types of battery plants. Just sketch out, and you'll sketch it out. It's roughly a mine's worth per plant. So it's a challenge for, well, it's a challenge for everyone. But if I was the OEMs and the battery makers, and I was thinking long term, which they don't particularly do on the raw materials, alarm bells should be ringing. And I really like this slide as well, which just shows you how lithium has done a complete 180-degree flip in 5 years. So as you can see, in 2015, 170,000 tons of LCE that was the size of the market, 32% lithium-ion batteries. But this year it's going to be 67% of lithium goes into lithium ion batteries. And that shows you how, I would say generationally important, but it's bigger than that. I remember speaking to, this is about 2.5 years ago now, I was speaking at a World Bank conference with some of the CEOs of the big mining companies, the big commodity guys. And I asked two of them separately if they had seen this level of growth in other raw materials ever. And both of them said no, independently, both said no. And they did talk about iron ore, I believe, back in the 70s. Not my time or my industry, so I can't comment. But the level of demand is shocking. And the challenge is even bigger. But at the same time, it's possible it will happen. It just might not happen at the rate that people are expecting. I put a picture of Andy Miller in there. Those that know Andy Miller, I thought would like to see his face. And this is him in the Salar de Atacama in Chile, picking up some lithium liquor, they call it. Not brine, but liquor. That's 6% that then goes into the plant. So here I'll briefly talk about building a complete lithium-ion supply chain on time. Again, the slide from earlier, the key is firstly to build capacity in every link of these supply chains. So you can have a battery plant, but it's as useful as a grain silo to an electric vehicle maker without the raw materials. So I know grain silos are useful for the grain industry and the food industry. I'm not saying they're not useful. I'm just saying if you're an OEM, it's probably not useful for you. And therefore, if you've got a battery plant, you're going to need the cathode and anodes. You're going to need the capacity for the chemical processing of those key inputs and the mine level capacity. Certainly, if I was an OEM, I would be laser focused on the midstream, that cathode anode and that chemical. If you've got the capacity there, you can make your batteries, because pretty much I think the mining side will naturally sort itself out if the midstream is there. But that's challenge one. Each link in the chain, significant capacity increases. Then the other key thing is quality. And that's what people don't talk about enough, is the tiers of quality that you need. You can't just establish a cobalt mine and make the cobalt sulfate that battery makers can use. There are levels of experience and quality, and therefore the lead times to bring on new plants is longer. If you start making lithium now, it'll probably take you 2 years to tweak it and perfect it for an OEM. And that's the same across all these raw materials. So maybe graphite is a little bit, the barrier for entry is a bit lower, certainly with the Chinese material, but a lot of blending happens there as well, which helps. But that's just something to bear in mind. And this is the tiers of quality that I mentioned before. Our tier 1 battery makers, tier 2s, and so on. And this we assess every quarter in our lithium-ion battery, assessment. Every quarter we track all the battery plants in the world, all the capacities, where the OEMs are using this, and that is something that we then publish, and this is one of the benefits of it, one of the components of that product. I just put this in, so I mean the presentation, I put it in so you can have a look at where we are going with battery demand growth. So the capacity numbers aren't demand, but actually they do track pretty close. Well, they did until this year, and then new battery plants announcements, especially in Europe and North America, have pushed out on further. But the raw materials aren't tracking anywhere near close to this, and I call it the great raw material disconnect, and I'll discuss that in a second. If you are a raw material buyer at a battery plant, this is your mindset. I thought this would be quite useful. This is everything that certainly I've gone through in my career speaking to these guys. In 2009, and 2009 to really 2017, 18, you're pretty much sort of doubling your amount each year. You're going from, in 2009, 500 tons of lithium. That's what you had to get a year, maybe 1,000 tons. It's a big plant. Then you're going to 2,000 to 3,000 tons. Then you're going to 3,000 to 5,000 tons. But in 2021, looking forward, you're at 30,000 tons. That's a normal amount to be trying to lock up now. And that's only in a 10-year period. So a 10-year period in the mining industry, in chemicals, isn't a long time. So this underlines the challenge, or let's say the pace of what's happening and how special the moment is on a global level. So I wanted to actually outline in a picture format. Please forgive my little pictures, but I thought I'd put it together to outline this great raw material disconnect. So at the moment, you've got a lot of downstream building out, lots of battery plants going up, lots of EVs being announced, but it's not in line with the upstream, with new mines or new funding being announced for new mines. I think that's the key. So where we stand today, we will end this year for lithium with demand roughly equaling supply. Prices have gone up, but it's roughly in balance unless something dramatic happens. It means next year won't be in balance, and the year after, and so on. But that's why I put a little green line between them. They're just about balanced. But by 2030, you can see this disconnect just growing and growing and growing. We are forecasting the supply of lithium to be 1.5 million tons, whereas the demand will be 2.4. It's a huge gap that has to be bridged. Otherwise, you won't have your electric vehicles, and you won't have your everything above, decarbonization of cities, of countries, and so on and so forth. Cobalt and the great raw material disconnect. This is key. So cobalt, again, is interestingly quite balanced this year. The plus 5K is a stockpiling effect. So that's something that doesn't really happen in the lithium industry, but you've got stockpiling, which can, tip the balance, if you like, or add that existing pressure on the demand side, which is why we've got that there. But by 2030, we're forecasting supply of 274,000 tons, but demand 476,000 tons. Cobalt's going nowhere. In fact, cobalt's importance in the safety of EVs is increasing. Of course, a proportion of cobalt is decreasing, but the demand in all the NCM plants being built is crucial. Of course, there are LFP battery plants being built as well, but NCM is going to be the dominant chemistry for the foreseeable future. It's the best chemistry for EVs. LFP is a lower cost chemistry. That's why they're using it. And it's still very good for lower range vehicles, but cobalt's going nowhere in an EV. And that's so important to underline. Nickel, this is how we view nickel. Again, these are total nickel tons. I know nickel sulfate is what goes into an EV, but as you can see, the gap is increasing there. Flake graphite, it takes 2.2 tons of flake graphite to make 1 ton of anode, but I put the flake numbers down here. The other key thing about what the numbers in 2030 and the disconnect is the proportion of flake going into make battery raw materials will increase significantly. At the top there, it's a small proportion. It's in, from memory, about 20%, but growing. The influence of lithium ion on flake graphite will significantly increase over the next 9 years. I'm not sure you can see how well you can see this, but this is price. I've grabbed these price curves of this year, or last 12 months for these 3 key raw materials. And what you're seeing across the board is prices are increasing. Of course, on top of battery demand increasing prices, you've got this beginning of whatever you want to call it, a commodity super cycle or a green powered super cycle. But right at the top of that tree, that super cycle tree, are the EV battery raw materials. And that really is, it's really important to underline that lithium, nickel, cobalt, graphite, manganese, copper, even though we don't cover it, those are all the key ones that are going to receive a double boost if we go through any form of super cycle, or if this kind of pressure continues. Where's it going to come from? This just outlines quite nicely the key raw materials. It's going to come from everywhere around the world, ultimately, over the long term. Disruptors are essential. New companies are essential. Otherwise, we're not going to be able to do what we need to do. Finally, last few slides. Why lithium-ion batteries are here to stay. It's important to know that lithium-ion batteries are getting cheaper. Let's call it lower cost. They're actually getting better as well. The batteries today are about 30% better than the batteries in 2016 in terms of energy density, performance, all of the above. And they're becoming lower cost. But as those costs go below to the $100 per kilowatt hour mark, this is large contract numbers. At the moment, this number is 110 for 2020. As they go below towards the 100 mark, raw materials become a much bigger percentage of the pie, 80%. So you can't really push the price of batteries much lower. It becomes very difficult to, unless you change the way these raw materials are extracted, you lock in low prices, or you own the mine itself. So that's the challenge with these OEMs. Nearly finally, this outlines that you don't have to, if you want to build a lithium-ion economy, you don't need to own the mining necessarily. You need to have some form of long-term partnership or strategic alliance. You need to own the midstream. This is China. Only 23% of all these battery raw materials are mined in China, but 80% are refined there in 2020. 76% of cathode anodes are made in China, and as a result, 77% of lithium-ion batteries. If you own the midstream, the raw materials will flow into that country, and you will get downstream dominance of the this energy storage revolution. Finally, we'll just look into detail that later on, but this is a slide that shows all the extraction processes. Last but one slide. The green circle is where the money's gone so far. The red circle is where not enough has gone. So really simple, but this headline sums it up. And I think this is the headline I'm going to finish on, actually, Joe.
Absolutely.
The Wall Street Journal in April. Battery metals are hot, but these miners can't get investors. Well, they can, but money is trickling in too slowly into the upstream when it's very clear now what the downstream is doing. I'm happy to answer any questions on that, but that probably summarizes nicely the presentation. Over to you.
That's perfect, Simon. Really appreciate that. We had a couple of questions come through here. You just want to kick off with the mega factory builds for years to come. You have expecting 215 plants to be built, bringing that terawatt hour capacity just under 4, $65 billion committed, raw material procurement up to 30,000 tons. Is this achievable? Can all these mega factories procure the necessary raw materials here? Or are we staring at a very obvious problem in the face? And is that really what lends itself to, these 3 price spikes that you're anticipating over the next 10 years?
It's achievable, just not maybe in the timeframes that OEMs are expecting. Maybe not in the timeframes that the battery makers are expecting. I think if you're building the timeframe of a battery plant is really useful, actually, to have in your mind. If you're building a battery plant from scratch now, then it will be ready in about 2 to 2.5 years. So where are we now? We're September. Okay, so you start now, it's going to be ready mid-2023. And then you're going to take it takes longer to ramp up a battery plant than it does to build it. So longer to actually get the batteries you need for the EVs than it does to build it. So that buys you another 3 years of tweaking and ramping. So that's then 5 to 6 years. So the numbers, like, you can say you're going to make a 30 gigawatt hour battery plant now. You're really going to be at 30 gigawatt hours probably by 2028. So then you've got a bit more time than the numbers on paper allow. That's enough if the guys building the battery plants are doing the lithium deals, the cobalt deals, graphite, nickel, so on, in conjunction with it. But that isn't happening. So all that means is that the scramble for the raw materials, the further we get into the decade, intensifies. And it will end up with the guys that can actually produce these chemicals, these key chemicals that the OEMs and battery makers want, they'll be able to call all the shots. And that's something that I can't see changing unless a lot and tens of billions pours into the mining industry within the next 12 months.
Yeah, and just on that, in terms of some color for our investor audience. I mean, a lot of the conversations that we've had with them, they are looking for a more standardized space. We see such bifurcation across every battery metal, whether it's carbonate versus hydroxide and the spot and contracting pricing that exists with cobalt sulfate and metal pricing, and what is actually representative for pricing on various exchanges, or just the opaque nature of graphite in general. How do we move forward from here? Because it's clearly driven to be a end user specific requirement. They have their own specs, but are you beginning to see a more standardized path forward that our investors can become more familiar with?
Yeah, I think the standardization on two elements. One, if you're looking at contract negotiation, well, that's the role that we perform at Benchmark. That's why we were set up to independently assess prices and other data points across the entire supply chain that are then used in contract negotiations and in big investment decisions. So the role of an independent body, which is us, has been key so far to helping the industry grow. But the other part of transparency is on the not transparency, let's say. Well, that will be contract negotiations. Then I forgot the second part of your question, but that might have answered it.
Yeah, I mean, I think it covers in terms of how majority of the supply chain is lithium industry supporting the lithium industry, right? And it's entirely end user specific. Are we going to gravitate towards more of a standardized price reporting, or something that investors can rely on as a barometer to understand what's moving forward in pricing?
Yeah, definitely. So on the pricing side, you're always going to be, the prices are still going to be done privately between buyer and end user and provider. But introducing independent pricing into that discussion is a way of stabilizing and actually pushing the industry forward. So that's what I mentioned earlier, what we do. The second part of standardization is, or let's say speeding up or smoothing out these volatility curves as we grow, is actually OEMs, battery makers, reducing their lead time to qualify new material. So if you are bringing on a new mine with a new chemical that you're going to produce and sell, actually those lead times now are down to they can be down to about 12 months. But when we first started Benchmark, they were like 2 to 3 years. So that's how far the downstream has come. So there is movement on both sides to speed this thing up. And it'll be interesting to watch how that evolves.
Yeah, no, absolutely. And I think you may have addressed this already in terms of, raw material supply. But where do you anticipate majority of the bottlenecks for the global production of lithium ion batteries, both in terms of, geopolitics and just fundamentals in general?
Yeah, the bottlenecks will be the chemical stage. Getting all the chemicals, I think, will have a bottleneck at some point, which is kind of where I showed that raw material disconnect, and the lithium ion battery cell stage. Like, I think that the OEMs are underestimating the availability of these tier 1 lithium ion battery cells, which can then be used in Western OEMs. Elon Musk has talked about this publicly, that they are cell constrained. The Tesla semi truck has been pushed into next year as a result of that, and hence they're putting everything into Austin to speed that up. So I think those two areas are the key bottlenecks for me.
Okay, maybe one more question here, Simon. We've started to see a trend with battery cathode and auto manufacturer relationships becoming the new normal. Daimler and Ferasis, Ford and SK Innovation, Volvo, Northvolt. There's quite a list, and we've seen that evolve over the last few years. Does that shape now the entire industry going forward? And if we're still nascent, if these producers of cathodes are creating the same sort of material, do we expect some sort of consolidation there as well?
Yeah, the relationship between battery maker and OEM will be interesting. At the moment, the trend outside of China is to build really big battery plants with joint ventures. and the cathode industry and anodes have to react and supply that. But I do think as we go towards the end of the decade that those OEMs will want to own that IP and own that battery capacity. You're already seeing it with VW. Definitely Tesla already are building their own battery plants. I think car makers will want to become battery makers. So roughly around 2028, 2029, it's going to get tasty, and we'll see what happens there. But that the downstream dominance thing between battery makers and OEMs will be, you get your popcorn for that because it'll be really interesting.
Absolutely. Yeah, we're definitely excited for that. Well, we appreciate your time, Simon. Thank you again for doing this. We're certainly excited to have had you here present today as our keynote. I just encourage everyone here to stay tuned. We have altitude discoveries starting at 11:40 today. Thanks, everybody. Take care.